Hi everyone, welcome back to Saheb Academy. Today in this video we are going to understand 3 golden rules of accounting, which is really simple and straightforward. We use these rules to pass the journal entries, to prepare the ledger accounts, to do the trial balance, and the entire accounting is based on this, isn't it? We have to know properly what are rules of debit and credit. Now you all know there are two different rules of debit and credit, right? First, we have these traditional approach, that is golden rules of accounting, okay, and then we have modern approach as well, which is based on accounting equation. All right, so what I used to do and I always do is that I do not prefer golden rules of accounting. Okay, in all of my videos, in all the chapters which I have taught, and personally also, I just prefer modern rules of debit and credit, which says that there are only 6 category of items in accounting: drawings, expense, asset, liability, equity, revenue. Yes, these two groups we have. One group has debit balance and another group has credit balance. To increase them, you have to see what kind of balance they have. Asset has debit balance. To increase, we have to debit, and to decrease, we have to credit. On the other hand, let's just say liability, which has credit balance. To increase it, you'll have to credit, and to decrease, you have to debit, right? This is called as modern rules of debit and credit. And this is really simple and straightforward, and it's easier actually. But now some of the people don't like this modern rules of debit and credit. They prefer golden rules of accounting, right? And to be proper accountant, you have to know both the things, really. Okay, you have to know modern rules of debit and credit as well as golden rules of accounting. Okay, then only you will be able to pass the interviews and you will have a overall approach. Okay, so that is why we have to cover golden rules of accounting as well. So let's understand what are these golden rules of accounting. It's really simple and straightforward. Let's begin. Now see here, to understand the golden rules of accounting, first, you need to know the traditional classification of accounts. Then only you will be able to apply the golden rules to pass the journal entries and everything. Okay. See, the golden rules of accounting are really simple. See, personal account category, real account category, nominal account category, right? For each of the category, you have a rule. For personal account, debit the receiver, credit the giver. For real accounts, debit what comes in, credit what goes out. For nominal accounts, debit all expenses and losses and credit all incomes and gains. Okay, these are the rules of accounting, yeah, golden rules. But you cannot just pass these rules. Whatever transaction happens in your business, what you have to do, first you have to understand in which category it is falling. See, we are following double entry system, right? One account will be credited and one account will be debited. At least that's what happens, right? So 2 accounts will be there. You will get to know which 2 accounts are involved in a transaction. You have to know now in which category they fall. In which category they fall. Then only you will be able to apply the rules. That's the thing. Fine. So to understand the traditional classification and the concept of these categories is very important. So let's just do that first. Okay. Then we'll see an example and you will understand how to pass the journal entries based on golden rules of accounting. Okay. So see here. First, we have personal accounts category, right? In this category, we take all the accounts which relate to persons. Fine. So see here, in this also we have subcategory, but don't worry, for all the subcategory, we have only one rule only: debit the receiver, credit the giver. See here, the subcategories are first natural persons, such as us, humans, Sonia, Rohan, Rohit, Shivraj, okay. Yeah, persons, simple. Yeah, if Sonia is receiving money, then you will have to debit, yeah, debit the receiver. If Shivraj is losing money or giving money, then you will have to credit, right? That's the rule. Then we have artificial persons. Now what are these artificial persons? Artificial persons are the entities that are created by law, such as banks, SBI, HDFC, okay, Kotak Bank, right? Wipro company, Infosys company, joint stock companies also come under this. A sports club, right? And then cooperative society. Yeah, all these are what? Artificial person. Your school or college is also what? A registered entity, right? A business, a company. So that will come under this artificial person. Your bank account will also be a personal account in this golden rules. Okay, it will be personal account. Is that clear? Okay, and then representative personal account we have. Now what is this? Account which represent a certain person or group of person is called as what? Representative personal account. Let's take an example to understand. Let's just say you have a shop. In that shop, 5 employees are working. Okay, now at the end of the month, let's just say you haven't paid their salary, but in accounting, according to the accrual concept, you have to record the salary, right? So when you will record the salary, will you, what do you say, use the name of the employee, whatever the name is, Ram, Sham, whatever, 5 different people are there, right? No, what you will do is you will group all their salary. Yeah, let's just say you are paying 10,000 rupees to everyone. Okay, so that's 50,000, right? So you will club that salary into one account called as outstanding salary account. Yeah, you will pass an entry, salary account debit, expense you will record, right, 50,000, and the credit will be what? Credit will be outstanding salary account. Yeah, 5 different people have been clubbed under one account. That one outstanding salary account is a representative of 5 different people, right? That's the thing. Okay, representative personal account. Is that clear? Let's just say you have a flat, right, and you haven't paid the rent. Let's just say you haven't paid the rent of your office, right? So it's payable to your landlord, right? Instead of taking the landlord name, what you're doing is you are taking rent outstanding account. You haven't paid the rent. Rent has become payable. You have to pay at the end of the month. You haven't paid it, but still you have to record according to your accrual concept. So you will use the account called as outstanding rent account, right? Rent is an expense. To that expense account, you are adding what? You are adding prefix. Before the word, you are adding outstanding word. Is that okay? So that becomes representative personal account. Yeah, it represents the rent that is outstanding to the landlord. It's a representative personal account. Is it clear? Okay, so there are many examples of this, don't worry. Okay, you will understand when we'll see more examples of this. Okay, see a prepaid insurance, accrued interest account, income received in advance, and understand the most important is capital account and drawings account. These are what? Representative personal account, because capital is of owner, and when drawings are made at that time also, what happens? Capital of the owner reduces, right? So drawings are also what? Representative personal account, because they represent the owner. Is that clear? So capital account and drawings account will be representative personal account. Fine. Okay, so you understood personal accounts category now, right? 3 different subcategories we have. You understood what all comes under that, and you know the rule: debit the receiver, credit the giver. Okay, that's the thing. Is that clear? Okay, fine. Moving on, then we have real accounts category. Now what is this real account category? It's really simple. Accounts which relate to tangible or intangible assets of the business, right? Those type of accounts will come under this category, real accounts category. Example, first let's understand what are tangible and intangible assets. See here, tangible assets are the asset which you can touch, feel and see, and they have a physical existence, such as, for example, land account, building account, cash account, stock account, yeah, your inventory, your goods, investments, plant and machinery, furniture, computer. All these are what? Tangible assets. Fine. And then there are intangible assets, which are opposite to this. They do not have physical existence, but you have a benefit from them, and you cannot touch them, see them, feel them, okay, but they exist. Okay, they provide benefit to your business. Fine. Yes. So examples are goodwill, trademarks, patents, licenses, and franchise rights, etc. These are what? Intangible assets. They will fall under real accounts category. Now what is the rule of real accounts? It's really simple. Debit what comes in, credit what goes out. Suppose you have purchased a land, you have got the land, so you have to debit that. Suppose you have sold your inventory, so you will have to credit your inventory. Yeah, it has gone out. Let's just say you have purchased furniture, you have to debit the furniture because it's coming in. Is that clear? Debit what comes in, credit what goes out. Is it clear? Real accounts rule. Fine. Debit what comes in, credit what goes out. And then we have the last category, that is nominal accounts. Now what are these nominal accounts? See, it's really simple. Accounts which relate to expenses, losses, gains and revenue are what? Nominal accounts. Example, it's really simple. salary account, rent paid, purchases account, sales account, commission paid, electricity paid, yeah, commission received, royalty received, rent received, yeah, all incomes and expenses will come under nominal accounts. Now you have to understand and wonder this, why is it called nominal accounts? Why is that so? Because understand, expense and incomes accounts are not carried forward to the next year. No, whatever transactions will happen and whatever balance will be there in these accounts, that balance will be finished. It will be taken to profit and loss account. Okay, whatever balance you have in this, it will hit profit and loss account, and over there what we are going to do is we are going to calculate the profit or loss that is made in the current year, right? So that is why in the current year, whatever expenses and incomes have happened, whatever balance is there, all that will be finished. Yeah, it will be transferred to profit and loss account. Fine, the balance will be reset, it will become zero. In the next year, you have to again reopen new expenses and incomes account. Is that clear? So these expenses and incomes are temporary in nature in accounting. Yeah, at the end of the year, you finish off all the expense and incomes account. It's temporary in nature, so that's why this word has come, nominal. Nominal means kind of like temporary. Is that clear? Okay, so you understood the nominal accounts. Now what is the rule of nominal accounts? Rule is really simple. Debit all expenses and losses and credit all incomes and gains. For example, let's just say you have paid rent, debit rent. Let's just say you have paid electricity bill, debit electricity account. Let's just say you have paid salary, debit salary account. Let's just say you have received rent from any extra room that you have rented out. You have received rent. So what you have to do, you have to credit all incomes and gains. Let's just say you have received royalty. If you have received royalty, then you have to credit that. If you have received commission, you have to credit that. Why? Because it's your income. Is that clear? Okay, let's just say you have sold some shares and you have made profit. That profit is your gain that you have to credit. Is that clear? Let's just say you have sold some other instrument, let's just say debentures or something, and you have made a loss. So that loss you will have to debit. Okay, all that comes under nominal accounts. All expenses and incomes account. Is that clear? So these were the three different golden rules of accounting, and the categories also you understood. Now let's just go to a practical example and let's just see how it will be applied over there with the journal entries, okay, following the double entry system. Is that clear? Okay, so let's go over there. So this was the concept of the categories that we have, traditional classification of accounts. Fine, but one small thing, see here, in nominal accounts, okay, let's just say we are talking about salary. Now salary word is there. Now to this salary word, if you add a word before this, right, which we call as prefix, let's just say you're adding outstanding salary, then it no longer is a nominal account. It will become a representative personal account, outstanding salary. Same with rent. Now to this rent, if you add suffix, yeah, a word after this, rent paid in advance, then this becomes what? This becomes representative personal account. Okay, prepaid rent or rent paid in advance, something like that, or rent received in advance. Yeah, rent is there, rent received in advance. If that's the case, then this is what? Suffix, right? Rent word is there, you have added a suffix, then it's no longer a nominal account, it has become representative personal account. Is that clear? So that was the last thing that you had to understand. Okay, now fine, we are fully over with the concept. Let's just go to the practical example. Now see, here we have the question. Let's understand how we'll pass the journal entries based on the golden rules of debit and credit. See here, from the following information, state the nature of account and state which account will be debited and which will be credited. Okay, we'll do that. Let's start with the first transaction. Started business with a capital of 50 lakhs. 50 lakhs means 5 million. Yeah, you all know that. So how are we going to pass the journal entry for this transaction? Or we can also say double entry. Okay, double entry, journal entry is the same thing. And you all know we are following double entry system in accounting, right? So in each of the transaction, at least two accounts will be involved. One account have to be debited and another account have to be credited, right? That's what happens. So tell me which two accounts are involved over here. You will say, see, we see the word capital over here. So obviously capital account is involved, and the other is money, right? 50 lakhs, 5 million, money is involved. So we can say bank account, right? It's such a huge amount. It can't be in cash. Yeah, it will be in bank. Okay. So what has happened? The owner has provided capital over here, right? So two accounts are involved, you're saying. So see here, started business with capital of 50 lakhs, bank account is involved, capital account is involved. Now you need to understand in which category these two accounts are falling in. Okay, let's talk about bank account. Is bank an expense or income? No, it's not. It's definitely not an expense or income, right? So it cannot fall under nominal account category. Yes, clear. And it's also not tangible and intangible asset. Okay, it's not. Okay, so it cannot fall under real account category also. It has to fall under personal accounts category. Why is that so? Because understand, bank account is related with the artificial person. I told you na, SBI bank, HDFC bank, yeah, all these are what? Artificial persons. Yeah, they are entities registered under the law, right? Banking companies, and the bank account is related with them. Yes, so it's a personal account. So this rule will be applicable on the bank account. Now let's talk about capital account. Okay, which type of account is the capital account? Capital account represents the owner's money, isn't it? So capital account will be what? Personal account. Is that clear? You all know what is personal account. Any account which relate to persons. Yeah, capital account relate to persons. Simple. Capital is not expense or income. It can't be nominal and it can't be real accounts also. It is not asset at all. Capital account. Is that clear? Okay. So it's both are personal accounts. So for both the accounts, we have to use this rule. So how we are going to use in this transaction? What happened? Tell me. In this transaction, owner has brought money into the business, right? But he hasn't brought cash. He deposited the money in the bank account. So bank received the money. Debit the receiver. Bank received the money. Is that clear? So you have to debit the bank account. Who gave this money? From where the money came? Money came from the owner, right? It's capital, right? So, owner has given this money, and here owner is represented in form of an account which is called as capital account. Okay, is that clear? So capital account has to be credited. Okay, owner has given the money, credit the giver. We can't credit the owner's name. We have to credit the capital account. That's his representative personal account. Is it clear? Absolutely clear. So both are personal account. Yeah, we have to debit the bank account and credit the capital account. This is how we are going to pass the journal entry. Bank account debit to capital account. Is it clear? Simple and straightforward. Moving on. Second transaction, wages and salaries paid 50,000. Okay. Now in this transaction, what is happening? Wages and salaries have been paid. Okay. So see here, wages and salaries have been paid. So you will take wages and salaries. Fine. And then bank. Yeah, these two accounts are involved over here. Yeah, easily you can understand. Fine. If they would have given you two different amounts over here, then you could have understood one is wages, another one is salaries. But here they are saying wages and salaries, so it's the same thing only. So only one account is there over here, wages and salaries, and bank account. Now, in which category does wages and salaries fall? Wages and salaries are not personal account. Yeah, they are not natural persons, neither the artificial person nor representative personal. Okay, it's not personal account. It can't be real account as well because it's not asset. It is nominal because it's expense, isn't it? In Hindi we say it's kharcha, right? It's nominal account. Is that clear? So it will be nominal account. And you know how bank account is personal account. Yeah, you have already seen the reason. So here how you will apply the rule? What do you do with expenses? Debit all expenses. So you will debit the salaries account, wages or salaries account, debit. Okay, and you will credit the bank account. Why is that so? Why is that so? On bank account, personal rule is applicable, right? It's personal account. So what is bank doing over here? Bank is giving the money. This money has been given through bank. So bank is giving the money, isn't it? If you see it like that, bank is giving the money. So credit the giver. Okay, this rule is applicable. So bank account will be credited. Is that clear? Simple. Now the third transaction, see here, rent received. Now which two accounts are involved over here? Rent received, obviously rent is involved, right? And then the second account which is involved is money, right? And money has been received in bank. Yeah, here we are not talking about cash. If they say cash specifically, then only we'll think it's cash. But here we have huge amounts, so we will think it's bank only. So second account is bank. These two accounts are involved. Now tell me, rent received is expense or income? Rent received means it's income, right? So what do we do with incomes? We credit all incomes and gains. Income account falls under nominal account, and this rule is applicable. Credit all income. So we will credit rent received account. Okay, and the other account, bank account is a personal account. So money has been received in our bank account. So bank has received the money. So we'll have to debit the receiver. Bank account will be debited. Is it clear? See here, rent received, bank and rent, these two accounts are involved. Bank is personal, rent is nominal. Yeah, rent received. Okay, this is not just rent received. Rent received means it's income. You credit all the income. Okay, so rent account will be credited and bank account will be debited because bank has received. In bank account the money is received. Is that clear? Fine, understood. The next transaction, purchase goods on credit 9 lakhs. Okay, on credit they are saying you haven't paid the money. So tell me, which two accounts are involved over here? Purchase goods means purchase account is involved over here. Now what is purchases? Purchases is an expense account. Understand that. Okay, it's an expense account. What do we do with expenses? In which category it falls? It falls under nominal accounts category. We debit all expenses. So purchase account will always be debited. Remember this. Okay, purchase account will always be debited. Okay, and then what's the second account? Second account is the creditor account. We have purchased the goods from our supplier. We don't know the name of the supplier, so we'll say creditor account, to whom we have to pay money. Okay, we can also say payables. Is that clear? So see, purchase made on credit, purchase account and creditor account. These two accounts are involved over here. Purchase account is nominal, expense will debit the purchase account. Simple. Creditor means our supplier. Supplier is a person, or if he's not a person, let's just say it's a company or something, then also it's a person. It's an artificial person, right? So he will fall under personal account category only. Okay, and what he has done? He has given us the goods. Right, we have purchased the goods from him. He has given the goods, right? So he's the giver. So credit the giver, personal account rule, right? Credit the giver, he's the giver of the goods. So purchase account debit to creditor account. Is it clear? Simple and straightforward. Last transaction, sold goods for 8,16,000 and received payment in check. Okay, we have made sales, but we haven't received cash. We have received in form of check. So check means we'll use bank account. Is that clear? Okay, that means we will receive money in our bank account, isn't it? Yes. So which two accounts are involved over here? Bank account and sales account. Now what is sales? Sales is income. Understand, sales is income. Income means nominal account category. Credit all income, right? So sales account will be credited. What will be debited? Bank account. Bank account will be debited. Why is that so? Because the money will be received in our bank. We have got the check. We will cash the check. Okay. Yeah, we'll just present the check to the bank, and then the check will be cleared, hopefully, and the money will be received in the bank account. Is that clear? So bank will be the receiver. Bank is the personal account, and will receive the money in the bank account. So bank will be the receiver. Is that clear? See here. Goods sold and payment received in check. Two accounts are involved, bank and sales account. Bank is personal, sales is nominal. Yeah, sale income, so you will have to credit that. Okay, and then bank is the receiver. Bank has received the money, right? So bank account has to be debited. Is that clear? Simple and straightforward. Okay, this was the practical example which we solved according to the golden rules of debit and credit. Okay, really simple and straightforward. So that's all for this video. I hope you have understood the golden rules of debit and credit with perfect clarity. If you have any doubts, comment down below, or you can just take screenshots, or whatever questions you have, just ask through the Instagram as well. Okay, so that's it for this video. See you in the next video.